Argentina, the debt spiral and the collapse of trust. 1. A death without an explosion. Argentina did not collapse in gunfire. There was no world war, no massacre that shook the continent, no clear end-of-the-world moment recorded in history books. There was no single day people could point to and say, this is when everything ended. Argentina declined gradually, through normalization, a little each year, a little each government, a little each generation, until an entire nation could no longer remember what a healthy economy felt like. They no longer remembered what it felt like to save money without fearing inflation, no longer remembered what it felt like to work and genuinely believe the future would be better. The most unsettling part is this decline did not come from a lack of resources. Argentina has fertile pampas plains, world-class beef exports, wheat, oil and gas, minerals, vast land with a relatively small population. The problem was not nature, the problem was trust. Argentina did not collapse because it ran out of money. Argentina collapsed because its people stopped trusting their own currency. 2. The debt spiral is not an event. It is a structure. To understand Argentina, we must look at structure. Not a single bad decision, not one specific administration, but a mechanism that repeated for decades. Argentina's debt spiral has 3 layers, and the interaction of these 3 layers created long-term erosion. 3. First layer, the fiscal spiral. It began in a very ordinary way. The government spent more than it collected, not for 1 year, but across multiple administrations. Social subsidies expanded, public sector wages increased, the state grew larger, populist policies were used to maintain political stability. When spending exceeds revenue, governments borrow. Borrow to cover deficits, borrow to pay interest on old debt, borrow to maintain the present. Deficits create debt, debt creates interest, interest enlarges deficits. This is the basic fiscal spiral. Many countries experience this, but Argentina did not stop there. 4. Second layer, the foreign currency debt spiral. Argentina borrowed heavily in US dollars. Government revenues were in pesos. Debt obligations were in dollars. The moment the peso depreciated, the real debt burden increased immediately. When investors questioned Argentina's ability to repay, bond yields rose, borrowing costs increased, debt expanded more rapidly, pressure on the exchange rate intensified. A weaker currency made dollar debt heavier. Heavier debt further damaged investor confidence. Argentina repeatedly turned to the International Monetary Fund for restructuring. But restructuring does not change structure. As long as debt is denominated in foreign currency, the vulnerability remains. 5. Third layer, monetizing the debt. When international markets were no longer willing to lend at sustainable rates, the government faced 3 choices: cut spending drastically, raise taxes significantly, or print money. Argentina repeatedly chose to print. The central bank purchased government bonds. Money supply expanded rapidly. Inflation accelerated. At first, inflation was measured in tens of percent, then 50%, then 100%, then 200% annually. At that point, the debt spiral evolved into a monetization spiral, and this is the most dangerous transition. Because the issue was no longer just fiscal, it moved to the foundation of the entire system, the currency itself. When governments print money to finance deficits, real domestic debt is diluted by inflation. Savings lose purchasing power. Citizens begin to question the state's control. Most critically, printing money does not create productivity. It does not increase real output. It only increases nominal prices. When inflation crosses a certain threshold, long-term planning collapses. Businesses cannot forecast costs. Households cannot plan their future. Long-term contracts lose meaning. The economy shifts into defensive mode instead of growth. 6. Comparison. How Argentina differs from Japan, Italy, and Greece. Japan has an even higher debt to GDP ratio, but its debt is largely denominated in yen. Most of it is held domestically. The central bank fully controls monetary policy. And most importantly, the public still trusts the yen. Japan faces debt pressure, but it does not face a collapse of monetary trust. Italy has high debt and weak growth, but it uses the euro. It cannot independently print money to finance deficits. Italy's risk lies in stagnation and market pressure, not hyperinflation of its own currency. Greece. When Greece lost market confidence, Bond yields spiked sharply. Greece could not print money. It was forced into severe austerity. The crisis came quickly and painfully. Argentina is different. Argentina could print, and it did. The crisis did not explode overnight. It stretched across decades. 7. The moment trust collapses. There is an invisible moment in every monetary crisis. No official announcement marks it, but it happens. It is the moment people realize that holding the local currency means losing purchasing power. From that moment, they move into dollars. They price real estate in dollars. They save in dollars. They think in dollars. The national currency still exists legally, but it no longer exists in trust. And when that happens, the system begins to fracture internally. Money is not just a medium of exchange. It serves three functions: a unit of account, a medium of exchange, a store of value. When a currency loses its store of value function, the other two functions gradually weaken. Businesses stop pricing in pesos. Long-term contracts avoid pesos. Savings leave the domestic banking system. The state loses effective control over money supply. Monetary policy becomes less powerful. Each round of money printing erodes confidence further. Trust declines. People flee to dollars. The peso weakens. Inflation rises. Trust falls even more. This is the fatal point. Because once monetary trust breaks, the crisis is no longer fiscal. It becomes psychological. And collective psychology, once destabilized, is extremely difficult to restore. Money is a promise about the future. When that promise is no longer credible, the future contracts. Young people stop investing. Businesses stop expanding. Talent leaves. A nation does not die when its budget is negative. It dies when its currency is no longer trusted. 8. Conclusion. A warning, not an accident. Argentina is not poor. Argentina lost trust. And when a nation loses trust in its own currency, the debt spiral ceases to be a technical budget issue. It becomes a societal issue. The real question is not which country will become Argentina. The real question is, where is monetary trust quietly weakening, without people yet recognizing it? Because major crises do not begin with explosions. They begin with gradual normalization of decline.